Good morning, folks. My name is Bob Adams, and I'm Pan Am's Vice President of Personnel. We're holding this meeting this morning to provide you with information regarding the Pan Am healthcare plan and the situation that has evolved as a result of the Chapter 11 bankruptcy filing. I'm assisted this morning by one of my staff people, Adele Askin, who many of you know, who directs the operation and the administration of Pan Am's benefit plans. I know that most of you have received a letter from me regarding this situation, and I hope that during this session we can provide you with the information that you'll need to make a proper decision. Unfortunately, this morning, we're probably not going to be able to answer the question that will be your final one. And your final one will be, what should I do with my situation? What should be my individual choice? But I do think that we're going to be able to help you and provide you with enough information that you'll be well enough informed to make a proper decision. Now, before I begin, I'd like to make it clear that Pan Am healthcare plan benefits still continue as they have in the past. You still file claims through the travelers and then receive your benefit payments in accordance with the Pan Am plan. If that's so, then, what's happened? Prior to March 13th, 1991, Pan Am paid travelers on a daily basis for every claim dollar paid out to you, if the money came back to you, or to your provider, being your hospital or your doctor or your dentist. In addition, we paid the travelers what's known as a risk charge, and the risk charge was to insure that plan. It was insurance to protect employees against having to pay covered expenses which were incurred but unpaid in the event that Pan Am was forced to cancel its plan. Let me give you an example. If you had incurred an expense on January 1st, 1991, and the plan had been terminated on January the 8th, and again, it was not terminated, this is only an example, you had insurance protection, and the travelers was required to pay that expense, even if they didn't get the claim until much after January the 8th. January the 16th, the 1st of February, March, whatever date they received that claim. It was incurred and unpaid prior to a plan termination, in this example, and the travelers was on the hook to pay that expense. That situation did in fact occur, is on January the 16th, Pan Am stopped reimbursing travelers for claims incurred, and I emphasize incurred, prior to the Chapter 11 filing, which occurred on January the 8th. We have continued, though, to pay travelers for all claims that were incurred after the Chapter 11 filing or after January the 8th. On March 13th, 1991, after trying for almost a month and a half, the travelers was finally allowed by the bankruptcy court to terminate the insured portion of our health care plan. So what changed? Probably nothing that you and I would notice if we had not sent you a letter, as we were obligated to do, and if we weren't here today discussing this subject. Under the old insured plan, the travelers paid claims on a daily basis, and at the end of the day, Pan Am was told by travelers how many claims they had paid and how much money we owed them. And we transferred money to travelers to cover the checks that they had written. Under the new plan, it works only slightly differently. Now travelers processes the claims, and they tell us before they write the checks how much the claims are for, and to the extent Pan American gives them the money, they then pay the claims. And again, I emphasize that each and every day since the bankruptcy filing, we have been providing them with money to pay these claims. How does this affect me? Well, it simply means that if the unthinkable happens and Pan Am should ever have to terminate the health care plan, claims incurred but unpaid would not be the responsibility of the traveler's insurance company. Those claims that you and I have after March 13th are the responsibility of Pan American. And if we should terminate the plan, it would be Pan American's responsibility, not the travelers. So now that you know that, what really changed? Again, it's nothing that you and I would really notice, and I think if you put on a slide here, I can demonstrate to you the difference in the process. Let's first of all talk about the old plan, the plan that was in effect through and including the 12th of March. Under that plan, travelers insured the plan, travelers processed claims, and Pan Am paid travelers on a daily basis at the end of the day for all the claims that they paid for us, plus we paid them a premium to insure the plan. If the plan would have terminated, Travelers was responsible to pay all claims that were incurred prior to any plan termination. What's changed today? Let's go to the second slide. Travelers provides us what's known as ASO service or administrative services only. Travelers still processes the claims, but we give them the money before they write a check. No credit for us. Travelers pays claims, but only up to the date of any plan termination. Let's look now at how Pan Am has tried to solve this problem. Pan Am, working in concert with its unions, and we certainly have worked together on this process, is establishing for all its health care plan participants, both active and retired employees, a voluntary employees beneficiary association, or as I explained in my letter to you, what's commonly referred to as a VEBA, V-E-B-A. Funds in this VEBA will be protected from Pan Am's creditors. Should the unthinkable happen and the Pan Am plan has to be terminated, the VEBA would pay claims incurred but unpaid up to the day of plan termination. In other words, what Pan American has done, since travelers will not have a relationship with us, we've created an employee trust that has funds in it to do the same thing with the $2,000 deductible, and I'll get into that the travelers was doing for us. Although not yet approved by the bankruptcy court, this VEBA is already being funded on a daily basis by Pan Am. There is no reason to believe that once the legal documents are approved by Bankers Trust, who will be the trustees, that the bankruptcy judge will not approve this VEBA in behalf of the Pan Am employees. As we explained in our letter to you, the VEBA would, and I emphasize again the would, reimburse claims which were incurred but unpaid prior to a plan termination with a $2,000 family deductible. Covered expenses would be paid from the VEBA trust after plan deductibles and co-insurance with an additional $2,000 deductible. Let me take you through just an example so that you can see some real live numbers here as to how the VEBA would work. If we can come down with the lights again, we'll put the slide up. Let's assume that the unthinkable should happen and the plan gets terminated. And again, the VEBA has no application to anything unless the plan is terminated, and it has not been terminated, and there is no plan to terminate it. It's merely a safety net. Let's look how the safety net would work. on the date of a planned termination. Let's assume there's an employee and his or her family out there who has $2,000 or $20,000 worth of health care claims that have been incurred but not paid. And after Travelers looks at our current plan, the plan that's currently in existence, there is for co-insurance and for plan deductibles, $500 worth of deductibles. If the plan had continued, the Travelers would have written a check in Pan American's behalf for $19,500. But the plan has been terminated. The safety net comes into effect. The VEBA now out of the trust, which Bankers Trust will have, the VEBA now pays the money to the Travelers to write the check with the instructions that there is an additional $2,000 deductible, and I'll explain why that's there in a minute, and the employee and his or her family would get a check for $17,500. While none of us are happy about the VEBA having a $2,000 deductible, we are fortunate that we work for Pan Am, because even in these times when we have very little cash to run our airline, our company is willing to fund in excess of $26 million into this VEBA trust to our benefit. The VEBA is funded on a daily basis, and by the end of the first 90 days, the trust will have a balance of $13.6 million and will build to the $26 million over the next 2 years. So you can see, while we've lost the insurance protection with the Travelers, the portion of our plan they terminated, Pan Am has replaced through the VEBA the majority, and it is the majority because of the $2,000 deductible, but has replaced the majority of that protection. Again, let me emphasize, this VEBA trust is set up to be used only in the event of a planned termination. The $2,000 deductible goes into effect only if the VEBA is activated. It does not apply today and has no effect.
Be sending you up-to-date information with respect to this May open enrollment in HMOs. I think as we get a little deeper into this morning, you're going to find that HMOs is a viable alternative for a lot of people who are in the audience. Why in this circumstance would you consider an HMO? Simply because many HMOs have told us that if the Pan Am plan should terminate, Pan Am employees who are participants in their HMO can keep their coverage going simply by making their own individual HMO payment and converting to an HMO under an individual plan rather than a group plan. So through the HMO process, should something ever happen to the Pan Am plan, you can provide for your continuing health care coverage without having to worry about a pre-existing condition or having to worry about taking some kind of a physical and having some insurance company say, you're a bad risk, I'm not going to take you. It is, though, a question that, as you talk with an HMO, you ought to confirm in your own mind so that you have your own answer and not my answer. Let's do a little final review here. And get fixed in your mind, and they probably already are, but some of the things that you should be thinking about. First one, if God forbid the Pan Am plan terminates, would I be able to go out and buy a plan on an individual basis? Or because of my existing medical condition or an existing medical condition of a member of my family, would I not be able to buy coverage? Should I join an HMO? Should I buy an individual policy that's available to me? Or should I be looking at conversion coverage through the travelers? We believe the answer is to look at all your options, and we're going to try to help you to do that this morning. Make sure you understand all your alternatives. Don't be afraid to ask questions. Call the Travelers 800 number and get information on the conversion plans. Incidentally, again, if you don't recall from my letter or you don't have the copy of my letter, let me give you that 800 number again. It's 800-582-9467. And it doesn't cost you a single thing to call, punch in your Social Security number. They're going to ask you for a 9-digit number, not your employee number. They're looking for your Social Security number. Punch it in on a touch-tone phone and at least get the package and look at it. Review the information we're going to send you on HMOs and do some of your own basic research. There is a right answer out there for you. We're not going to be able to give it to you this morning, but we'll be able to give you the facts and tell you the things that you need to do. And if you do your homework, I'm fairly confident that people are going to make good decisions. I've had the opportunity to talk to some people who have just wandered into our office, and we sat them down and said, what are you doing? Who have you asked? What have you done? What information do you have? And for some of those people who have already indicated they made decisions, well, we can't make it for them. It seems all like they're pretty well informed, and they made pretty good choices. Now, we've got a big room here. I guess we've got at least 400 people here because I know there's 300 seats. There are tons of questions out there. Adele has been kind enough to compile questions and answers. She's going to come up here now, and she's going to go through the questions and answers that we've been hearing over the last couple of weeks. I divided the questions under 4 different headings: general, conversion questions, HMO questions, and VIVA questions. So I'll start with the general questions. Wouldn't COBRA be available if the Pan Am plan terminates? COBRA is a continuation of the group medical plan, so if the group medical plan terminates, so do the COBRA benefits. If I opt out of the Pan Am Travelers medical plan and take a conversion, can I get back into the Travelers medical plan at a later date? And the answer is yes, subject to evidence of insurability. You have to fill out a questionnaire. Why can't Pan Am take $30 million of the UAL money to pay back what we owe to Travelers in order to get Travelers to provide insurance? Travelers will no longer provide Pan Am with insurance. And they're not unique. We did market this plan to a number of insurance companies to try and replace the insurance that was lost, and they're just not interested in taking on that risk at this time. How does an employee know if a condition would preclude him or her from obtaining insurance from an outside carrier? An employee would just have to ask that question of the insurer that you're seeking insurance from. Most plans do have exclusions for pre-existing conditions, most individual plans now. They have waiting periods, perhaps 11 months. I know the Blues have an 11-month waiting period on pre-existing conditions. Conversions, they have to take you. There's no waiting period on pre-existing conditions if you convert with the Travelers. Can the company tell employees which option to take now? No. I mean, we'll give you as much information as we can so that you can make the most informed decision that you can, but we can't tell you what to do. What about my group accident and long-term disability coverage? Does this have any effect on that? And the answer is no. These coverages are insured. They're fully funded by Pan Am employee contributions, and those monies are turned right over to the insurance company, so they are unaffected by the Travelers' action. What are extended benefits? This was mentioned in Travelers' letter, which was attached to Bob Adams' letter of March 15th. If your medical benefits terminate for you or a dependent for any reason, benefits will apply to covered medical expenses incurred for the remainder of the calendar year and all of the following calendar year if the medical expenses are related to an injury or a sickness or a pregnancy where you were totally disabled when the plan terminated. Let me put it in a little simpler terms. If you were at work on the day the plan terminated, you're not totally disabled, okay? But if you were away from work with a disabling condition, a condition that prohibited you from working, expenses related to that claim, depending on when it occurred, if it occurred prior to March 13th, are insured, and you have extended benefits. For that condition, benefits would continue to the end of this year and all of next year, provided you remain totally disabled, but only for expenses related to that disability. Our benefit checks coming from Travelers on Travelers check stock or from Pan Am directly. As Bob explained it, Pan Am funds a bank account. Travelers draws the checks from a bank account that is funded by Pan Am. Right now, those checks, they still say Travelers on them. If I don't want to convert with Travelers or enroll in an HMO, what happens? Your benefits under the Pan Am group plan continue as they are today. There's no change. Benefits will be processed in accordance with plan provisions as they exist. Travelers told me I must convert my life insurance. Is this true? The answer is no. I will tell you, at this time, the life plan is still insured by the Travelers. Nothing has changed. However, we are due back in court on this issue at a later date, and we are currently looking for another carrier to insure a life plan. Okay, conversion questions. Pan Am says employees have 45 days to convert their medical insurance. Travelers says it's a 31-day conversion period. What's the right answer? The right answer is 45 days, as was indicated in the Travelers letter that was attached to Bob's letter, and that was the notice of termination. That's the one that we're going by, and you have 45 days to take action. If I want to convert my medical insurance with Travelers, how do I do it? First, you obtain conversion information by dialing the 800 number, and it does work. I have the stuff, I did it myself, and it works. In order to sign up, you'd have to cancel your Pan Am group insurance, medical, and when you do that, indicate that on the application that you're sending back to the Travelers with your conversion premium. And that's all it takes. How come conversion rates are so high? How can a person possibly afford it? Conversion rates are generally high because the insurance company must take you without evidence of insurability, provided you apply during the time limits that you're supposed to apply. This is not unique to travelers. They're governed by state laws, and the fees are regulated by state laws. If an employee elects a converted policy in lieu of Pan Am Medical, can he keep his dental and his vision and his prescription drug? I think Bob covered that. The answer is yes. You will retain those benefits through the group plan. If a covered participant is over 65 and the spouse is under 65, can they both convert? Yes, assuming both were covered under the group plan, there is a separate Medicare conversion for the person who's over 65, so there would be 2 applications filed at that point. If an employee has a dependent child who is covered as a handicapped child, will he or she be eligible for the conversion? And the answer is yes. As long as they were covered under our plan, they would be eligible for the converted plan. Under what circumstances could an employee or would an employee be denied a converted policy? Coverage under any plan or policy, whether it's insured or uninsured, whether it's a group plan or an individual plan, will be considered when Travelers determines whether or not you're overinsured. If I have coverage under my spouse's plan and the whole family's covered under it, they could deny me a conversion policy stating that I have too much insurance between the 2 plans. How long is a converted policy in effect? Assuming that the premium is paid, the policy stays in effect until age 65 or eligibility for Medicare, at which point you would be offered a Medicare conversion policy. The policy could also be terminated within 2 years if you, the insured, obtains other coverage, which then results in overinsurance. You get a job and now you have a group plan from another company. They could terminate your converted policy at that point. If an employee elects a converted policy now and turns 65 down the road, is he still eligible for the converted policy? And the answer is yes, that Travelers has a special conversion policy for Medicare eligible participants, and you would be offered the Medicare supplement at that point. If a single employee converts now and then gets married, all of a sudden has dependents, can they add the dependents? And the answer is yes, they would be able to add the dependents to the converted policy. If I convert now to individual coverage, what happens when I retire? At retirement, your converted policy would continue. You continue to pay the premiums, and you would not be eligible to participate in the Pan Am Retiree Medical Plan. Because it's the same as the group plan, you can't have both. If I elect a conversion plan, will Pan Am contribute to the cost of this plan in lieu of the group plan? I think Bob explained that, how the company will arrange to reimburse you the maximum of your per capita share of the current, of what Pan Am currently pays to administer the Traveler's Medical Plan. No, I said that wrong, I'm sorry. Up to the same amount that Pan Am contributes to the medical plan per capita, that's the amount that they would contribute to you towards the purchase of your converted policy, less any administrative fees. What is the effective date of my conversion coverage? The effective date is the date you cancel your Pan Am medical coverage, but no later than 45 days from March 13th or April 26th. No later than April 26th. VEBA, the Voluntary Employee Beneficiary Association. What is it? What do the initials stand for? We've described that. This is a trust fund, a 501c9 trust that the IRS allows employers to set up for the main purpose of paying employee benefits out of the fund. My husband and I both work for Pan Am and both carry individual Pan Am coverage. How does the $2,000 deductible on the VEBA work? You would each be subject to the $2,000 VEBA deductible should the VEBA be activated. Now remember, that doesn't apply today. That's only if the VEBA is activated. Is the $2,000 deductible on the VEBA trust the same for an individual as it is for a family? And the answer is yes. Why is the VEBA trust deductible so high? The VEBA trust was designed to pay benefits at a level which Pan Am could provide the funding for and still protect employees against a catastrophic illness or expense. Even with that $2,000 deductible, the cost to have the trust fund fully funded is $26 million over 2 years. And at the end of 90 days, it will be funded to almost $14 million. Has the VEBA trust been approved by bankruptcy court yet? Bob explained that. It has not, but there is no reason to expect that it would not be. We are already putting the funds aside, and it's just a matter of the lawyers getting their signatures on these things. HMO questions.
If I am on a leave of absence now, can I enroll in an HMO during the annual open enrollment? The answer is yes, provided you are in the medical plan. Now, you know that if you're on a leave of absence, you have the option of continuing the medical depending on the type of leave you're on. If you choose not to continue the medical and you're not in the plan, you would not be eligible for the HMO at that point. Can an employee switch HMOs during the open enrollment period? And the answer is yes. If you're in one HMO today and you decide that you'd like to try a different one, the open enrollment is the time to do that. Do all HMOs have a conversion option if the Pan Am plan is terminated? No, not all the HMOs have the conversion option, but most do. And it's safe to say that in the New York area, the ones that we offer, they all do have a conversion option. Pan Am will be mailing the general announcement letter out on the HMO enrollment within the next couple weeks. Maybe next week, is that what we decide? We'll provide as much information at that point as we possibly can, and then marketing material will be available later in the month. And we do plan for this enrollment to invite the HMOs on the property to be available to you to answer any questions that you may have. If I'm in an HMO today, am I eligible for the traveler's conversion? No. You are not eligible unless you're in the medical plan. If you're in an HMO, you're in the HMO. Do HMOs pay for non-HMO hospital stays when an employee is taken there without knowing or in an emergency situation? Let me answer that question first. The answer is that the HMO that you belong to will determine whether or not that run to the hospital that was closest to your house was of an emergency nature or urgent care. And they will make the decision as to whether or not they're going to pay the bill if you didn't use their facility. I can tell you that the HMOs that Pan Am offers, and we have some 32, 33 HMOs, they are very familiar with the mobile workforce that we have, that people do travel a lot and they move around a lot. And I don't know yet of any instance where an employee had to seek emergency care out of the HMO network where it wasn't covered by the HMO. So they're very flexible to the extent that we do have this mobile workforce, but they will make the decision in the end. Why is the effective date for the HMO July 1 and not sooner? Pan Am has agreements with all the HMOs. These agreements run from July 1 to June 30th, and all our rates are set accordingly. We did try and get things changed, and we just couldn't do it. What happens to retirees with respect to the plan? Can they now go into an HMO? Retired employees are not eligible for the HMO alternative like an active employee is. If you are in an HMO today and you are going to retire, you have the right to continue your HMO participation on your own. You can do that on your own. And you can join on your own if they take individual memberships. But Pan Am does not make the HMO option available to retired employees. If I enroll in an HMO, will Pan Am pay the HMO the same amount as they currently pay towards the travelers for our medical coverage? This is exactly the way it has worked for years, and it continues to work that way. Pan Am contributes towards the cost of an HMO the same amount that they contribute towards the cost of your Pan Am medical plan, and that will continue. If the cost for the HMO is higher than what Pan Am contributes to the cost of your medical plan, you pay that difference, and we do that through payroll deductions. If I choose this alternative as a retiree, will I be reimbursed by Pan Am up to the amount contributed to the travelers? This is a question that came up before. It's a retired employee who wants to take an alternative, and his alternative is an HMO. Would he be reimbursed to the extent that Pan Am is going to reimburse employees? And the answer is yes. Not to be confused with you, an active employee who joins an HMO. The money for you is going to go straight to the HMO, and Pan Am's going to take care of that. You will not be reimbursed that money. That is it on the prepared questions. We're going to open it up to questions.
The question is there's a $2,000 deductible on the VIVA, but is there a cap? The answer is there is no cap. And the funding for the VIBA has been determined by our actuaries, and what they've looked is at the plan experience, and it's funded every day based on what we should produce in this group, all of us, in the way of claims. So there is no cap. If somebody has a $250,000 claim, it's going to be the same calculation as you saw for the $20,000 claim that where I showed you the slide.
And it's provided you have not exceeded your max under the plan, which is $5 million. It's not likely, but.
Okay, thank you.
If we are going to convert from the present plan over to the travelers, that we have to notify personnel, correct? We send the money in with the form to travelers, all right? What happens in a lapse of time from when we notify personnel till travelers processes that form? If you're injured or something, who is going to pick up the bill?
There's no lapse, because the day you terminate your group plan with Pan Am will be the effective date of your conversion policy. Even though they may not have gotten your check, as long as that check is in the mail for the period of time beginning that quarter, you will be covered under the conversion policy.
That's all I wanted to know.
If it terminates with travelers on the 26th of April, with respect to the question the gentleman had over there, between the 26th of April and the 1st of July, he said if the Pan Am plan terminate, you'll be exposed. Does that mean that if the Pan Am plan does not terminate, you'll be covered by the Pan Am plan?
Sure, you're covered by the Pan Am plan as long as you want to stay in the Pan Am plan. Nobody's telling you got to go take an HMO or a conversion or anything else. Only thing we're saying to you is if, God forbid, the Pan Am plan should be terminated, you may want to look at some of these other options that you could continue on an individual basis. That's all we're saying.
Okay, the question is if I get laid off, the plan's not terminated, but I get laid off, what kind of options do I have? As long as the group plan remains in effect, you have a COBRA option. You can continue the same exact plan by paying the full company cost plus 2% for a period of 18 months. At the end of that 18 months, however, you're right back where you are today, okay? And if you were laid off, now that's not a discontinuance of the plan, you're just laid off, so your plan's terminated because your employment is terminated, that pregnancy is still covered, even if you don't take COBRA. Okay? There's a difference in termination of the plan and your employment being terminated.
Question is, the HMOs where we have to pay an additional cost, could you tell us which ones they are and how much the additional cost would be for that particular HMO?
The question is, as it relates to the HMOs, can we advise employees of the ones that do require an additional employee contribution? And that will be part of the letter that we send you for the HMO open enrollment. Okay? Yes. Question is, if I sign up during the open enrollment in May for a July 1 effective date for my HMO coverage, in that interim period, am I still covered under the traveler's medical plan? And the answer is yes, provided you haven't canceled it, you're still covered.
What happens with the HMOs? I surmise that they're getting paid in advance, but if something happens to Pan Am and they don't get paid in advance, how does the VIBA fall into the same thing with the 2000 or what?
The question is, she understands what happens to the Pan Am plan if it terminates and how the VIBA kicks in, but what happens to the HMOs? We do pay the HMOs a monthly premium, and if the Pan Am plan was to terminate, so goes the HMOs, you would be eligible for a conversion benefit under the HMO. The VIBA would not affect you at all.
Going to retire June 1st, and if I don't take the conversion, will I be covered?
He's going to retire on June 1st, and he wants to know if he doesn't take a conversion, will he be covered? You will continue to be covered under the Pan Am medical plan as it exists today, and as a retired employee, you're eligible to continue the same medical plan with the maintenance drug plan, no dental, no vision, and that would continue so long as the plan continues.
If you take the traveler's conversion, I got the package, but it doesn't say what more or less is covered under that. What we are covered under the travelers now, as far we're limited, to percentage and all like that. If you have the individual plan, is there a larger margin? In other words, can we take any hospital, any doctor that we choose, other than the ones that they give in that book?
Yeah, okay, the question is, if I convert, am I still locked into the preferred provider plan that Pan Am now makes available? The answer is no. Now, I don't know every single conversion plan that's out there. I mean, there are 8 options available to you in New York. But the ones that I have seen, you are not locked into using preferred providers. You can use who you want, but the benefits are going to be paid at the levels that are described in that material.
You made quite a point of pointing out this difference in the time frame. What was it, April 26th to July 1st, as a sort of an open time that could preclude you from joining an HMO? I didn't quite understand that.
Now, I think it was me who made the point, and as we talked about conversions and HMOs, I simply wanted you to understand that your conversion option ends on April 26th, okay? The HMO, which is going to be a viable thing for an awful lot of people, has an open enrollment in May, but your participation in the HMO doesn't start to July 1. So you got a little gap there from April 26th to July 1. That was the only point we made.
My question is on the VEBA. The funds that will be accumulated in the VEBA, will they all be dispersed? That'll be accumulated in the VEBA, will they all be dispersed? In other words, if you've paid out everything and there's money left, will it further reduce the $2,000 that we've deducted?
Yeah, the gentleman's question was if all claims are paid under the VEBA and there's still money left in the VEBA, would we go back and try and reduce the $2,000 deductible? And the answer is yes. If there was money left, it would be distributed over all the claims that were paid.